Hello everyone, welcome to a new video. Today I would like to analyze the company IBM. And the reason for it is that it recently published the results for the third quarter of this year, this past October 19th. And well, let me just say that after publishing them, the stock dropped a 6.7% on the following day. And this has not just been a small dip and that's it. No, in fact, the company has continued to go down, or the stock price, and in total now it has already gone down 12.5% and is approaching levels that were only seen on the crash of March this year. In light of this, today we will analyze this stock and everything around it to see if this drop in price has been justified, or if on the other hand there is just too much pessimism on it and it is currently undervalued and therefore it could potentially be a good opportunity of investment. But before we get right into the topic, let me first give you a brief overview of what will be the points that we'll be covering today. So first of all, we'll be having a look at what is it that IBM does, a general overview of their business. Afterwards, we will be looking at its stock price and stock-related topics, followed by the financials, of course looking at the ones that they just recently published, and finally I will be giving my personal opinion on the company, the stock, and whether I think that this is a buy right now or not. IBM stands for International Business Machines and is an American company that provides computer solutions. More concretely, the company offers applications, technology consulting, process design, cloud computing, network services, and other consulting services. And I think that something very relevant about it is that it recently acquired the company Red Hat this past summer of 2019 for a total of $3.4 billion. And if you're not in the IT space like me, you probably might be wondering, what is Red Hat exactly, Robert? Well, after doing some research on the topic, I found out that Red Hat provides hybrid cloud technology solutions. Which, in more understandable words, it just means that they provide cloud solutions, so of storage of data, but that they combine both private with public cloud. And so this basically in a company would involve that maybe they would use the private cloud to store, let's say, more confidential documents, or confidential information, and then the public one for other things. Now moving on, some recent news that are very important to not miss is that IBM recently announced at the beginning of the month of October that it would be undertaking a spin-off during the next year, 2021. And a spin-off, in case you're not aware of it, it just means that IBM will be separating in two different companies. So essentially, if you own one share of IBM before the cut day for this spin-off, then they will separate this in two different companies, which essentially will not have that much of an impact because in the end the two companies together will have the same share price that the one that you were previously holding. But the question here is, why exactly do they want to do that? And well, according to them, they want to create two leading companies in their specialty. On the one hand, there will be IBM, that will be a hybrid cloud and artificial intelligence company that is expected to generate annually around $59 billion in revenue. And on the other hand, there will be this new company that, by the way, it still has no name, which will manage infrastructure services, providing IT infrastructure modernization, service delivery excellence, and operational efficiency solutions. Alright, so now you have an idea more or less of what IBM does and some recent events that have surrounded the company and that I think that are super important. So now I think that it's time to go and have a look at the stock. International Business Machines is trading under the ticker symbol IBM in the New York Stock Exchange, and at the moment each share is worth $110 per share approximately. Also, something relevant is that it pays dividends, and in fact it is a dividend aristocrat, which means that it has been paying and increasing dividends for more than 25 years in a row, which is of course something relevant. Currently, its dividend yield stands at 5.62%, which is actually quite high, and a payout ratio of around 50%, which is quite conservative. Looking at the stock graph though, we see that although throughout history it has been increasing in price, since 2012 the stock price has been on a clear downtrend, which is usually not a good sign, especially when it is sustained for so many years already like it is now. But to confirm this, let's go into the financials of it. As we said before, we will be looking at the financials. It just published this past quarter 3 of 2020 in order to understand better everything and have super fresh information on how the company is doing. Firstly, looking at the revenue broken down into the different segments, we see that all of them have been declining except for its cloud and cognitive software, which is of course not good. Yes, we are in the middle of a pandemic and many companies have had to reduce and cut costs, and part of this cost I'm sure that it has been the digitalization, IT solutions and so on. But if we have learned something, or if this pandemic has accelerated something, has been precisely the digitalization of all the businesses, and it has just demonstrated that it is key if they want to keep moving forward. So with all of this argument, what I'm trying to say is that this argument of the pandemic, in this case, I think that it can only be used up to a certain point, because I think that many companies have just already taken this step in order to digitalize more their businesses. So I think that in this sense, their business has not been as affected as many other companies. Moreover, it is already the 9th consecutive quarters of steady revenues or slightly lower, which means that essentially the company is facing a bigger problem than not just the pandemic. On this, we see that revenues have dropped in total a 2.69% versus the same quarter of the previous year, 2019, which, as we were just discussing now, is of course not positive. Nevertheless, looking at something that is positive, we see that the gross operating margins have increased from 46.2% to 48%. And in the end, looking at the end of the quarter, we see that they have reported a net income of $1,698 million, which is 1.49% higher than the same quarter of the previous year. Although, if we look carefully, we also see on the right side that the accumulated net income for the first 9 months of this year is still 26.5% lower than the previous one, which is again not good. Alright, so we have that so far the income statements, although they have been reporting profits every single quarter, are not looking great from a long-term perspective. But now let's go and check the balance sheet to see what is the current situation. On it, comparing the total liabilities with the assets, we see that they have a current debt ratio of 86.16%, which is not extremely conservative, but not super risky either. But to check the evolution of it, I have also gone and checked the debt ratio that they had on the same moment of this past year, 2019, and in that case it was of 86.21%, which is almost the same. I mean, they have reduced a tiny little bit of liabilities, which is of course good, but I think that nothing significant. But at least comparing it with many other companies that have had to take a lot of debt in order to stay afloat and sustain their operations, like one example is the company that we just analyzed this past week of Southwest Airlines, that by the way, if you're interested, I will leave the link above here for you, and also down below in the description. So I think that on this sense, IBM is doing quite good. Alright, so now after having seen many different aspects of the company, it is time for me to give my opinion on the stock and whether I think that this might be a good opportunity of investment or not. Personally, after everything that we have just seen and the figures, I think that it is clear that this is a very consolidated company with very good margins, because in the industry they are in, they have great margins, but that is struggling a lot in order to increase their top line. And I mean, they did the acquisition of Red Hat, as we just saw, which is of cloud business and so on, which is really working very well for them. But all the rest of the segments that they were already having before are on a clear decline. So concluding, in my opinion, if you invest in this stock, you need to have clear, or if you invest, it needs to be because you think that they will find a way to increase their revenues, because at the moment, as we have just seen, they are pretty stagnated. On the other hand, though, it is true that they offer a dividend yield of almost 6% with a relatively low payout ratio of 50%, which is of course interesting. Personally, as you might already know if you watched the video I recently published in which I share with you my whole entire stock portfolio, I currently own 2 shares of IBM at an average price of $122 per share. And if you're wondering what am I going to do with those, no, I'm not planning on selling them. For now, I will keep them, first because they offer a very nice dividend yield, and secondly because I'm hoping that they can turn things around and find a way to increase their revenues, whether it's buying another company or, I don't know, innovating in whatever they do. So that's why I will keep it there. But it's a bit of a risky play in the sense that it could very well be that they continue the trend that they have been following, that they don't find a way to increase their revenues, and then they just get left behind by more innovative companies. This is something that unfortunately I do not know, and that only time will tell whether they are able to stay competitive or not. In any case, something also to keep in mind is that there is a lot of pessimism at the moment with this stock, So I think that there is a bit of upside potential in this sense, also because they will be having this spin-off in, let's say, 1 year time span, and seeing how the previous splits that very popular companies such as Apple or NextEra Energy, for instance, have done, and how has this made increase their price substantially. It could also be that with this spin-off, investors get excited about IBM and then they want to invest in it. But again, we will have to see. Anyways, something important that I want to remind you is that I'm no financial advisor and that these are just my opinions and thoughts on this particular stock. So if you want to invest, make sure you do your own diligence before doing so. In any case, that was the end of the video. Let me know in the comments below what you think of IBM as a stock. If you enjoyed the video, then please make sure to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.